This is our Forex blog for May 10th, 2011. And one of the things that you want to do each day is look at our currency meter and find the real-time strongest currencies, and you want to buy those versus the weak, and you want to sell the weakest ones versus the strong. Today the pound, was consistently the weakest. Daily, weekly, monthly trends down. Same thing with the euro as far as the longer-term trend, but it was actually, showing lots of strength today. The dollar and the yen were weak. They kind of did a turnaround a few days ago, and the yen's the strongest of those pairs. However, it's showing mostly weakness today. If the real-time weakness is there, you're always on the lookout for that trend to switch from down back to up. But if it doesn't happen, just take scalp type trades. When you don't have, the easiest days are when one currency's daily, weekly, monthly trends up, and the real-time trend is up, and you're buying that one against one of the weakest currencies where its daily, weekly, monthly trend is down. Some days like this you're going to have conflicting trends. Now the only one really that the only two that didn't have conflicting trends were the pound, whose real-time weakness was down and daily, weekly, monthly trends down, and the Australian, where it's the strongest of all the currencies, and you can see real time today it was pretty much strong all day. So selling the pound Australian was pretty much a no-brainer. The Swiss was very weak today and had a weekly trend down. If the weekly trend's down and the monthly trend's up, I personally focus on the weekly trend because it's fits more intraday time frame. What happened over the last month is less significant than what happened over the last week. So basically today you could have bought the Australian Swiss and had really nice trend trade up and sold the pound Australian. And you could have also done some trades with the dollar and the yen, but we'll go over those in a bit. So first we're going to bring the pound Australian up, and just like I said, this is one that's very likely to go down, and it did. And once currencies break underneath their hourly, the trend's more likely to go down. When it's above the hourly, the trend's likely to go up. And whenever you start trading, look at what happened before. This went up, it was underneath the hourly, went up, found resistance, didn't have incredible strength before, then double topped multiple hours later, and then broke down underneath hourly. And the longer term trend's down. So, if you wanted to get short right here, and you didn't make much on that, it fell about 20 pips. Previous day's lows of support, ran out of steam, came up, you made a little bit on that, came back up to the resistance of the previous month's low, weekly pivot, monthly pivot, hourly moving average, ran out of steam, you went short again, and that second trade generated about 30 or 40 pips, came back up, couldn't get back above the resistance of the previous day's low, very good place to go short, and went down to our trading zone. I'm going to add our new tipping point and momentum pro, which give you a bar by bar snapshot of what's happening in real time. In my opinion, it's the best tools that we have in our software. FX tipping point measures the mass of the market, in other words, how many pound pairs are falling and Australian pairs are going up, and the momentum pro measures the velocity, how far they're moving today, bar by bar, versus the past. So, first of all, on the way up here earlier, there was a decent broad-based move up, but with less than normal volatility, and then the market dropped, and we had, that big drop right here clearly showed up, and it was the weakest of both indicators for the whole day, and you had a head start on this short right there. If you saw the double top and saw extreme weakness, and over the next two bars really no strength, and went short right here, you were in the trade a little bit earlier, and you might have got out of the first trade here at the previous day's low, went short again right here. Notice on the way up right here, no strength. There was one bar that had a lot of momentum because maybe one currency moved a lot, but it wasn't a broad-based move. A few currencies went up, and they might have went up a lot, but not the majority of them. And when you don't have a majority, typically moves kind of run out of steam, especially when the longer-term trend's down. Keep in mind also, you want to draw your fibs on the first wave, and usually a 50% pullback is a pretty decent place to go short. You can see almost to the pip, it pulled back up, it went a pip or two above there, broke down, and guess what? As this is falling, you have a broad-based move with decent volatility to the downside, then it kind of runs out of steam. So you're not expecting this thing to really continue. You made a decent amount of pips on here, 40 or 50, and you're out as it goes sideways. And notice as it goes up, there's not a broad-based move to the upside. There is one bar right here that did make a big move up, but it wasn't a broad-based move. And so when it finally comes down the next bar and breaks that bar's low right here at 63, you're short. You can see a pretty decent broad-based move to the downside with a little bit less than average volatility. So the Fibonacci profit target, the previous week's low, and our trading zone, which is usually a likely low for the day, is a great place to get out of this trade. Excellent place. And again, that's a nice 40 pip move. Now, remember the pound's weak, and I think the Swiss was another one that was strong. No, the Australian. No, we already showed this one. What was the other one? Well, the CAD had incredible strength today. Oh yeah, the Swiss was weak, so you could have bought the Australian Swiss. And as you see on this currency, it's just kind of chopping around right around the hourly, and then it breaks out. Anytime you have at least a 2 or 3 hour sideways range, those breakouts tend to work, especially when the daily, weekly, monthly trend's in the right direction. This is one of those trades where if you miss this right here, you pretty much missed it because it shot right up to the top. You can see incredible broad-based momentum on the way up. You know, maybe on the tick chart you might have bought the first pullback here. You might have got into this trade, you know, right here, and that didn't pan out. You probably would have lost. I don't really see any other trades I would have taken other than this 2 hour sideways range breakout right here. And you know, as this thing's going sideways right here, initially there's, you know, the breakout bar, there's a lot of momentum, and then, you know, it's not a broad-based move. It just goes sideways, and it's up near the upper containment band. A lot of resistance up there. You know, I would have just bailed on it. It just didn't work. You know. The CAD also was very strong today. Its weekly trend is just slightly up, monthly trend's down. That's the downside of that. The yen was, you know, the weaker of the dollar and the yen. So you could have bought the CAD yen. Let's bring that chart up here. Super strong CAD, weak yen, and this one also was chopping around for a couple hours right near the hourly, and you know, it was underneath Fibonacci area, and it broke above it, which is a sign of strength. You can see as it's going sideways, almost no, you know, the most of the moves to the upside are showing the CAD pairs going up, yen pairs going down at a decent clip. There's not much volatility, and then it breaks out, and you have a very high momentum breakout. Unfortunately, it's not a broad-based move, and then a couple bars later, you know, it becomes a broad-based move with declining volatility. So, you know, what you want to do in this case is move your stop that's underneath the lows, and when it goes sideways like this, you move your stop up, and then you're expecting this area right here to be the resistance, upper containment band. So it's going up. You know, it's a broad-based move up. Most of the CAD pairs are going up, yen pairs going down with decent volatility, and it goes above the upper containment band right here, counter trend sell signal. The triangles are usually the end of the moves. You know, it's an extreme overbought situation, and it's also above or upper containment bands, so it's a good place to get out. This trade you would have got in at around 50, maybe out somewhere around 80, probably 90 right here as it started to come back down. And if you want to buy the pullback, you would have got in right here, went up a little bit, came back down, went up. You know, you see lots of momentum to the up and down side. If currencies are going up, down, you know, that's not conducive to a nice, long, smooth trend, so you might want to get out of that trade with a, you know, small 10 or 15 pip profit. Pulls back again, doesn't break this low, and on this pullback, you know, most of the bars are not very high, and they're not at our extreme level, and the volatility on the pullback is very little. It's one of the best ways of trading with these tools is if you see a move up with a lot of volatility, a lot of momentum, the force, mass times velocity, you know, is high, and then you get pullback with almost no momentum. Usually you can buy that and make some money. You know, it pulls back, you go long right here somewhere around 79.80. It starts to go back up, broad-based move up with, you know, less than an extreme amount of volatility, and it's double topped right here. You always have to assume double tops are the end of the moves. It's also up near the upper containment band. Maybe you got out a few pips from the high here at 96, but that's, you know, 15 pip move. Now let's say you wanted to just trade the euro dollar or, you know, the pound dollar. Let's bring this up and spot some good trades on it to finish class. This one, you know, is underneath the hourly moving average coming into the day, so it's more likely to go down, and you know, it's also in a nice little sideways rectangle slash, you know, wedge pattern, which typically leads to nice trends. The most likely trend direction is down, it breaks down right here, and you go short, and you can see mass and velocity come into the market. It comes down to the 50-day moving average, monthly S1 pivot. Keep in mind that this currency, I believe, has been, no, this one hasn't. All right, take that back. That's the euro yen. But it has been down quite a bit, in the last week and a half. So when it gets down near the lower containment band, currencies that are down too much tend to, get nice little snapbacks like that. That's why you should always look at the daily chart. The currency's down 500-600 pips from its highs. You might want to look to get out of trades as soon as the downwards momentum runs out of steam. It goes sideways here. You might have got out of it here at 92 or whatever, but you made 30 to 40 pips on that trade, and you're looking to sell and move up. Now it goes up with a lot of momentum, mass and velocity, hits the hourly moving average. That's usually a great place to go short. You can see at the time though that it's quite strong. It has a lot of euro dollar pairs going up, dollar pairs going down with a lot of velocity. And at 3 o'clock right here, if you looked at the currency meter, the strength of the dollar is pretty much gone, and the euro is one of the strongest pairs. So you might not have taken that trade, but if you did, let's say you did sell the hourly right there. Let me bring that back up here. You sold it right here. Whoops, sorry, wrong chart. Sold the hourly right here. And notice on the way down, initially it's a pretty decent broad-based move. Not a whole lot of volatility in those two bars. Usually currencies that hit the hourly pull back at least 10-15 pips. Usually when the currency goes 10 pips your way, you want to move your stop in half or to break even. You might have lost 4 pips there. And because the momentum was clearly to the upside and the pullback had almost no momentum comparison to the move up, you might have bought this breakout right here. And again, initially it's a very broad-based move with a lot of volatility. And as it's going up and making a higher high, the broad-based move declines and the volatility starts to decline. Look at this bar right here, right at the top. Very little upwards momentum, and it also happens to be right where the Fibonacci profit target is. At the very least, that's the 1.618 profit target also. Get out of your trade. If you're a really aggressive trader that wants to, a good chance of picking up 10 to 15, 20 pips as it pulls back to the hourly, you might have gone short right there. But if you only want to trade with a trend, you wouldn't. Now, as it pulls back to the hourly, initially there's quite a bit of weakness there with a lot of momentum, so you might not have wanted to buy the hourly. But when it went up, kind of give it a little chance to fall again, and it doesn't. There's no weakness anymore. This is a little bit of a safer trade, and as it starts to go up, you see a broad-based move, and right after this bar right here, even though this bar went up, other bars are going down, and the tipping point showing down. So you get out of your trade there with a small 20 pip profit versus giving back more of your profit. Now, anytime a currency hits the hourly once or twice and it doesn't go back underneath it, you definitely want to buy there until it goes lower. This is clearly the momentum of this one was to the upside. You might have went long right here, and notice as it went up, there's really no momentum to the up move, so you might have lost 5 pips on that. Pulls back again. Notice the weakness on the way down. Nothing. There's almost no weakness. So when it goes back above the hourly, you're back in. And notice mass and velocity are there. Starts to work its way up. I might, on this big red bar right here, be a little bit concerned, move my stop up. Counter trend sell signal, I might have got out of that trade right here around 66 for only about an 18 pip profit. And I probably wouldn't have bought this pullback right here, but if you did, notice the tipping point was very low after that 2-bar pullback, and the momentum was very low. If you do take trades like that on the scalp basis only, look to make 5 to 15 pips, shoots up, a lot of momentum, and then the tipping point declines, the volatility declines, that's it. It's the end of the move.